Today's educational live stream is about trading with moving averages, and I'm Computer Brain. So, moving averages are one of my favorite tools to trade with. I would say that I wouldn't say that I'm necessarily a trend trader. I really like trading level to level, somewhat range trading, but I'm always using moving average confluence. You never want to go against the key moving average for the chart. So, I think also in some ways moving averages are misunderstood, and they can be used like more like a Swiss Army knife than like just for like one type of setup. So obviously they can help us stay on the right side of the trend. Um, it can help you enter at the beginning of the trend and exit right before the trend turns in the opposite direction. It can be used for validation to enter a trade and also invalidation to get out of the trade. If you're not using fixed targets, saying like, hey, I'm going to sell, at a certain price, and you don't know where you're going to sell, you can simply just ride the moving average until the moving average folds. And that can be really powerful and help you get some really big winners that are outsized. And obviously, moving averages are kind of like the bread and butter tool for trend traders. So there's three types of setups that I use moving averages for. A reclaim of a key trend, a continuation of a key trend, and then invalidation, which I somewhat touched upon in the prior page. So the reclaim setup is, I would say, my bread and butter. It's my absolute favorite. It's pretty simple, but very powerful. And it usually involves the loss of the trend. So what I have here is I call it my moving average cloud. And I encourage everyone, and later in the stream, I'll show kind of different examples of different moving averages and how to pick the one that's right for you. It doesn't necessarily really matter. I just recommend that you fit it to the chart. The one that I'm using is a custom indicator that was made kind of with ChatGPT. It is a 50-period EMA SMA, and it also uses Supertrend. So it's really cool. I like it a lot. It works for what I do. But basically what you can see here on the reclaim is the price lost the moving average cloud that I felt was really respected here. It was the 1 hour cloud. It was not just the cloud that was lost, it was the level. And then you can see here on the setup, you lose the level, you lose the cloud, come back above, kind of regain the cloud, and then as soon as the level is reclaimed, you enter, market order, smash it, boom, and you're kind of off to the races. And then on this type of setup, you would close when either when the cloud is lost or, fixed profit. I actually did take this trade, so I closed it around $4. Obviously, I missed out on a little bit of a higher move up, but this worked pretty well. Yeah, and again, obviously using the moving averages with key levels is such alpha, in my opinion. Like these types of setups, like I'll take all day, and this is really the majority of the type of trades that I'm trying to take, long and short. So you have that. You have the continuation setup, which is a little bit different. It's a little zoomed out here, but you can kind of see it reclaims here. It kind of just bounces along. It does lose it here again, but it reclaims it. I would say this is all just kind of like one smooth continuation of a trend. For me, it was when I flipped this level, I said, hey, it's continuing the trend. It's flipping the level. Game on, boom. This is a trade I actually did take. So this is, I summarized it here. Wait for the trend confirmation. Enter upon the retest of the moving average. And it boosts the likelihood of success if you pair it with the key level. I will say I don't use this setup as much. I prefer the trend to be lost and then regained. Obviously these continuation setups are much, much, much more useful if you catch them earlier. Like for example, really the trend was kind of regained here. You get in here, stop here, you would have captured much more alpha. But again, this is not a great screenshot, but this price crashed after this, and it bonk is now much lower here. But like, for example, if you had bought here in price on this retest of the cloud, you would have failed. Unless you had taken profit up here, you would have round tripped this very quickly because this plunge. So you have to be mindful how many times price has tested your moving average. Again, it's better to be early than be late. So if it's like the, call this 1, 2, 3, 4, 5, 6. So it's like 5, 6 test of the moving average. How much longer is it going to last till it somewhat fails? So just be mindful of that. You want to be early to these trends, not late. Which is why I like reclaim, because reclaim is the first. It's the beginning of the trend, the first reclaim of the trend, not like the second, third, fourth, fifth. And let's talk about using moving average to cut early. I think this is actually, I like the reclaim setups, but also like you pair the reclaim setup with using your cloud or your moving average. I just say cloud, which is just my moving averages with color, as your signal to stop or to cut it. So on this example, let's just look at this top one. This is actually 2 real trades I did take on Solana. Both were winners. Here, simple reclaim setup, reclaim the level. It's a little bit sloppy on the moving averages, but it did push above, and reclaim, I was hoping to get the yearly open, didn't happen, but really harsh candle down. I had alerts set, and as soon as this was lost here, I closed the trend. I was immediately notified. I was at my computer, and as soon as it lost this moving average here, you're out of the trade. So it's not a big, very, very small win, but it's still a win, and it's not a loss. And if I hadn't been paying attention, and sometimes you can just simply move you can trail your stop. I wouldn't be too greedy with it because sometimes it can bounce and then keep going. But somewhere in this vicinity to let you know that if price plunges, that you're out and you're not losing money, you're making money. This is one of the best reclaims, and this are the best use of moving averages in my opinion. So yeah, that's the three ways to do it. I'm also going to let's talk about fitting moving averages to the chart. I'm gonna have to go into TradingView, and I can also talk about the pros and cons of different types of moving averages. I will share my screen in Discord for the viewers. Okay, so we're on Bitcoin. We are on Bitcoin, and we are going to figure out how to pair the moving average to the trend. So this is good nuance here. Let me get a cleaner chart. This is my clean Bitcoin chart, and what we'll do is let's get rid of some of this noise. Okay. So this is a very clean Bitcoin chart, just levels and just volume and price. And what I want to do is, let's say you want to get in on this bottom here. And I actually kind of maybe already, let's just zoom out though. And you say, hey, I really, really, really want to figure out how to get as early as possible back on this winning trend, and I want to know when to close it. So what you do is you look backwards. All right, so this is the daily trend of my 50 period moving average. This is the 50-day moving average, pretty much. I don't love this. Like, you really want to see kind of what works at the beginning. This gets pretty chopped up. You can get in, get out, get in, get out, right? Which is what you would have to do if that's what you assign as the moving average. But I don't think this is a fantastic one, because by the time that you are reclaiming this one day, you actually have price up to here. So this would have told you to enter at 91 when this cloud is flipped. When it's flipped, this is the super trends aspect of my custom indicator, which, by the way, is available in the Academy Discord for people in the leverage trading channel. You flip this, and then the trend now becomes here. I don't love this one. Let's look at the 12-hour. I basically want to see what was good for capturing this reclaim. I don't really like the 12-hour either. I'm very specific about kind of what I like. 6-hour. gotta say, let's see the 4 hour. Yeah, I like this one. I think this is the best trend. So 4 hour 50s would be if I could, if I was fitting this to this, if I wanted to see like in this upcycle, what was the best trend and maybe what's the one I should use moving forward. I think it would be this one right here, 4 hour 50s. So you can see here, the trend is lost. It's been, chopped up, lost, chopped up, lost, lost. We reclaim, boom. You could enter here, enter here, enter here. It doesn't matter. Your stop would be below the structure and below the cloud. Boom, 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 boom. We never actually lost the cloud here. Didn't have a candle close in it. Boom, 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 boom. Perfect, perfect, perfect. And then once this starts getting all choppy and nasty, you'd cut it right there. So you would have been able to ride this from, call it 78K to 106. That's pretty good. So you can see how you can use these moving averages to trade very big trends. Like, that's great. That's fantastic. Now, let's say I want to trade higher time frame, or sorry, lower time frame. So this is like how you'd use it on a larger time frame. But let's say you're zooming in and you're saying, hey, I'm a rotational trader, level to level. Let's zoom in here. Let's actually go really zoomed in, 15 minutes. So let's say you are trying to figure out, there's all this consolidation. Are we going to break lower, break higher? I don't know. This is back in, late April, early May. So what you might want to do is say, okay, when it broke out of this consolidation here, all this chop, call it from here to like, I don't know, here. What did it look like when it actually broke out? And what did it look like until, let's say you're here and you want to see what it looked like. All right, so 15 minutes. When it actually broke, it kind of got chopped up here. You probably would have, by the system, if you lose the moving average and the last high, kind of that, you would be chopped out. So let's zoom out a little. Let's see 30. And honestly, that's pretty damn good. I like to get it as tight as possible. So this technically didn't actually lose the trend because the bar didn't close. That's very tight. Sometimes you might be like, hey, let's just do 45. And then that won't happen, right? It taps, boom, taps, taps. And then you would have gotten out. Actually, you would have gotten out here. So let's see if let's see what's better, 30 or 40. Kind of the same. I guess the 30, the bar didn't close. Actually, it did, yeah. So you would have been chopped out here. So either way, 30 or 40. But let's just look at this. So let's say, okay, all right. So next time, for me, what I would need to see here is a reclaim of this trend, so above the 30, and then a reclaim of this level. So I actually probably would have market bought here, set a market order above here, and known that this was reclaimed. And, the stop you'd probably put either below here, or below the trend here. And this is probably a little more nuanced, but if the price kind of came back into the range after breaking out, and then if this level was lost, like the moving average cloud, like if you lose the cloud, then you would cut it early. You wouldn't wait to get stopped out on something like that. So let's see this. All right. The 30, this isn't really that clean of a level. But you could say something like, okay, reclaim the 30. Okay, you'd lose it again here, but then this really becomes kind of your range highs, I think. Multiple tests. You'd say, okay, reclaim of the 30 here, boom, above the level, boom, off to the races, and then it kind of expands higher. And this is actually very pretty here. So then you would have cut here at this point here, boom. Once the 30 is lost, boom, 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 boom. And then, yeah, this brings you to all-time highs. So then you could choose to get back into this. This is, again, kind of messy. I kind of like the 45s, to be honest, on Bitcoin a little bit better. And it's loading. Yeah, I think the 45s is much cleaner. And it's really, so I said cut there, so you'd cut here. So then this is really clean. So then you would get back in here. Okay, boom. Either you'd add here, but that would be the same thing as adding when it retests here. So 45's reclaimed, enter. You could add some more, you could add some more, and then boom, you'd cut it here. So not a bad trade. So let's call it you'd get in around 104, 105. You're out at about 110. It's not bad if you're using leverage in your trading perps. So these are some examples. These are not trades I actually took, but I'm just saying this is how you can think about trading with moving averages. And again, what did I say? So the 4 hour seems like a really good high time frame trend, right? Like if you're a guy who's like, all right, or a girl who's like, all right, I want to get in early and I want to ride this. So, I mean, look, this has been really chopped up, this whole range, and you have to kind of recognize when to use moving averages and when not to, right? Things are really, really oversold after, months, a couple months of downtrend, things are looking really bleak. We hit a high time frame level, and then we kind of reclaim and keep moving up. That's a great example of when to use a level. This right here, we're chopping between, range high, range low. This is getting somewhat chopped up. So I give these kind of higher time frame moving averages a little less credence. I'm not saying just because this is above the 4 hour here that this is going to be, that we're going to just trend to all-time highs, right? We had reclaim here, failure, reclaim here, failure, reclaim here. I don't know. Let's see. It's obviously awesome bullish move here, but we have to see how this plays out. This is not as good of an entry as I think after a long, prolonged washout like this, then reclaiming here. That's a fantastic entry, especially after like something like this where it's like, bottom one, higher bottom two, failure to push lower, and then kind of a very sharp reaction. So let's see. So that is I think kind of how to size your moving averages. Let's just go to ETH real quick just so we have a different, or actually, you know what I can do? I can just delete all these. Okay. So I'm using my custom indicator, which is 50 period EMA SMA with super trends. It's custom ChatGPT. It's available in Academy. But that is not the normal thing. That is actually a very kind of rare, unique indicator. There is a couple very popular ones. There is the 200 period moving average, which is like, I would say probably one of the most popular moving averages, if not the most popular, I think, for kind of crypto trend traders. I think a lot of people learned how to trade like this. And it's simply the last, 200 periods, meaning if it's on the 4 hour, it's the last 200 4-hour periods. If it's on the 1 day, it's on the last 200 days moving average. And again, same with my little custom indicator. You just have to fit it with the chart. So what fits really well on this kind of high time frame view? 1 day, is it 2 day, 2 day 200s? I don't even know if that shows up. And if there's not enough data for it, sometimes it won't show up. Oh, no, it is. This is actually not bad. 2 day 200s, boom, test the bottom, boom, test the bottom, boom, test the bottom. This is not bad. This is just random. This is something I've never looked at. But yeah, you see this white and gray cloud here is the 200s. So that fits pretty well. There's other ones that, the 20 and the 50 is kind of a more popular, like, short time frame trader use case, like the 21 day. Yep, right. So you'll see a lot of like kind of lower time frame traders be like, all right, if it's above the 20-day moving average, which is the white line, that's bullish. If it's below the 20-day, it's bearish. And then kind of like this, the 50 is the gray one. That's more like, I think, kind of high time frame. If you're still more like a range trader, like level to level. But yeah, look, there's no rules. I think you just have to figure out what works for you. This is Trader Exos. This is a 12 and 25 period. So this is 12-day and 25-day moving average here, and obviously it moves with the periods. You can go. This is free. You can go download that for free in TradingView. So I think you gotta figure out what works for you. I like to have all of them on there. I kind of like, I love to I love to try to think about what other people are thinking. So if I know a lot of people are looking at this, and the 200s, and the 1 hour 200s is the same as actually my 4 hour 50s, just math. I like mine because it's just stylistic, but this is something that I think a lot of people have been looking at as the low time frame trend for Bitcoin. You can see here, boom, boom, boom. It pretty much respected this all the way up. And now we're above it again, and so people are like, oh, we're so bullish. But then again, this is what happened last time. So let's just see. But again, I encourage you to, test out a bunch of different moving averages, whether it's the 200s, the 20 and the 50, the 12, the 25. I have the 50 and the 50, 50 EMA, 50 SMA. Just figure out what works for you and your style of trading. And it's not hard to download these, but also create your own in TradingView. Like if you spend enough time, you can do it on your own, which is I pretty much have built all of my own indicators, or have worked with friends to build them, or using friends. But I don't really use a lot of off the shelf indicators. Even this one I actually made myself. This simple moving average. With clouds, it's pretty easy to make in ChatGPT or any other AI agent. So I think we've covered kind of how to use moving averages, what are the moving average options, fitting the moving average to the chart, the types of setups that you can trade with them. I guess I would really, really emphasize that moving averages on their own are not alpha. I think that when they're paired with kind of high time frame levels, they can be though. They really, really, really can be. But remember, these are showing up on your chart, but they're not necessarily showing up on everyone's chart. Therefore, just know that it's not consensus. Nothing needs to bounce just because it's been respected before, right? It kind of bounced off this 1 hour 200s, and then up here it didn't bounce. It doesn't always work. You have to take kind of a broader context into everything. Going back to the presentation now, I'll give a couple examples of how you can use them. This was a level on SUI. This was kind of range high, range low. This was a deviation above this kind of range. And then as soon as it fell back below and lost this kind of moving average that I said fit pretty well for on the short side of things. And that's another good point. You need to be fitting your moving averages short and long. Just scroll backwards on the chart and see what worked and what didn't more recently. But the moving averages that work on the short side and long side aren't always the same ones. So just be mindful of that. So this was a great trade I took on the short side, and then actually on the long side, the same exact type of setup, right? Reclaim of a level, moving average flip, and this one actually didn't work out. So that was a loser. The short was a winner, but I think it's good to kind of show winners and losers. Okay, Pepe reclaim, and then I cut it early in as a winner, but I didn't get the target. So this is another good example. Again, Pepe dumped, and then reclaimed this kind of level down here. Reclaimed the moving average. I longed it. It was going to target. Didn't hit target. It lost its moving average here, and then I cut it early right there. I think I actually moved my stop up, so it was automatic. And I had a very tiny winner, but at least it wasn't a loser. Oh, I didn't copy that correctly. Fartcoin. Kind of same concept. This is a range low. This is the moving average that I said worked really well, the 15-minute. Bounced along, reclaimed the moving average, stop below structure, boom, off to the races. Sol reclaim, lost the level, lost the moving average, chopped around, reclaimed the level, reclaimed the moving average, boom, long, stop below structure, and off to the races. This is one that I cut way too early. So this is a good example of you don't always want to have fixed targets when you're using moving averages, because I think many times it is a good idea to have fixed targets, but then there's every once in a while when you're in these just banger environments, and like it just goes way farther than you think it could. And this is an example of that. So I would have been way better cutting up here when the moving average failed. This is one that worked, and then I had to cut it early for a very tiny gain. So I flipped short here. I actually didn't even really wait for the moving average to flip. I just kind of felt that this was going to come down, and it did, bounced around. But then as soon as it came back up here, broke the moving average, it was basically a scratch win. All right, last one I think in here is ENA and continuation setups and examples of how you don't want to be late to the trends. On continuations, you want to be early. So look, this is the trend. Worked pretty well. This was whatever, 1 hour moving average. Boom, 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 boom. So I tried to long this retest of this moving average here, and that was the loser, right? Would have worked here well. Would have pretty much worked here well, but being late to the trend, I was punished and I was taken out, and I think I actually cut it pretty quickly. But yeah, I think you just have to be mindful of where you are in the trend and who's late and who's early. And that's it for me. That's how I trade moving averages. Let me know if you have any questions, and I will catch you on the next one. Thanks so much.